discuss the tax credits because there is an in the section 10 we have discussed with relating to the disallowable expenditure, which is if any expenditure which is subject to withholding tax, if the tax has not been properly deducted or the deducted, that particular expenditure is not allowed for deduction, right, under section 10. So we to get that understanding, I need to discuss the tax withholding tax concept of the withholding tax. Okay. Right. It's last week I discussed with you. There are three mode of payment. How to discharge taxes? There are three ways. So first one is installment payment. We call installment payment. Installment tax payment. So by way of installment, right? So second thing is withholding tax. By withholding. Third one is assessment. Right? So installment payment, it's recognized as installment taxpayer. Who is liable to pay tax on installment basis has to be discharged his tax liability on 4 installment. Right? So the installment taxpayer shall submit an statement of estimated tax payable, SET, right? Statement of estimated tax payable at the on or before the or at the time of the first installment tax payment, which is due by 15th August, right? Next week, right? Right. By way of withholdings, this is happening. Act itself recognize 3 types of thing. Payment, it says it's subject to withholding, liable for the payer to deduct tax at the time of payment. At the time of payment, right? So 3 sections. First one under the employment, we call APIT, Advanced Personal Income Tax, section 83. Right? Second one is AIT, Advanced Income Tax. This is goes on investment return, right? Section 84. Next one also AIT. It is also section 85. Under section 85 it says it is also on service fee payment. If somebody is making service fee to resident individual, that withholding tax coming, right? It is on service fee. This is investment return. This is on employment income. Right? So, under this 3 types of payment, the first one is employee related or the remuneration related payment. When the employer make the payment to employee, he is supposed to deduct APIT, or we call it, the mechanism is withholding tax, right? Tax should be withheld at the time of payment. That's why it's called withholding tax, right? So thereafter, it is not his assets. He has to. He means the employer. So in the very correct word is tax agent. He is working as an agent of the revenue authority or the collector. He is collecting tax on behalf of government and remit to the tax authority. or the Commissioner General accounts, right? He is an agent of the Commissioner General. He is collecting or deducting tax at the time of payment and remit to the Commissioner General's account, right? So who? Employer. Says employee, there is a definition, employer and employee. So there are other thing is on investment return. Somebody is making an investment return, he has to deduct tax and remit to the Commissioner General's account. Okay. Other one is service fee payment. Here there are two parts. One thing is, in case of a person who is conducting a business in Sri Lanka and makes any payments to resident individual, only individual, who the service fee is related to only resident individual, then he is supposed to deduct withholding tax. Other one is in case of the person making any payment to non-resident person. That is also covered here, right? Non-resident person also, when any Sri Lankan person or the resident person is making any payment to non-resident person, he is supposed to deduct withholding tax, right? So under the assessment, basically two types of assessment. From the taxpayer side assessment, other thing is revenue authority side assessment, right? Taxpayer side assessment means we call it self-assessment or the self-assessment tax return, right? Taxpayer has to, in Sri Lanka we have self-assessment tax payment scheme. So taxpayer has to work out his tax liability and he has to discharge, right? So apparently he has to submit a tax return of income, right? On his return of income he can make any payment, tax payment. It is self-assessment tax return. Another thing is capital gain tax return also. Under the capital gain tax, he has to submit a return. On the return basis, he has to pay taxes. That is also assessment with taxes, right? Other assessment is, there are another three types of assessment which is coming from the revenue authority sides. First one is we call default assessment, right? Second one is advance assessment. Third one is amended or additional assessment, right? We will discuss separately that one. So under that particular assessment, if the Commissioner General requests to taxpayer to make that payment, he has to pay based on that assessment, right? That is assessment based taxes. The method of tax payment, first one is by withholding, by installment, by assessment, right? So by withholding, APIT and AIT, so withholding tax. So on employment income, on investment income, on service fee, right? So first one is on employment income, APIT, under section 83, now it's course 83A, 1A, advanced personal income tax. So advanced personal income tax introduced with effect from 1/4/2020 for employment income, and it was a compulsory deduction for non-resident and non-citizen, but optional for resident and citizen, that is up to 31st December 2022. Thereafter, deduction of APAT by employer is mandatory from employment income of employees with effect from 1/1/2023. On January onwards, APIT is mandatory, subject to some limitation. I mean, there is a limitation. If it is exceed that one, it is mandatory deduct. Previously, it was only on terminal benefit, right, and non-resident payment. The obligation for an employer to deduct APIT shall not be reduced or extinguished when the employer has a right or is under an obligation to deduct and withhold any other amount from the payment, or any other law provides that an employee's income from employment should not be reduced or subject to attachment. What is mean that? So say employer is there may be direction given by the employee to the employer to deduct some expenditure, whatever thing, payment. Say, so I obtain a loan, right? I'm giving a direction or the instruction to my employer to deduct my loan repayment, or collect my loan repayment from my remuneration and remit to the particular say bank, right? So but because of the tax, he is not in a position to deduct that one. right? Once the tax is deducted, so then employer cannot recover that loan repayment. So it says no such obligation with the employer, but the priority he should given to deduct tax. First thing he has to deduct tax. That's first mentioned. The employee to deduct shall not be reduced. He cannot be escape or he cannot reduce that one because of any other law or the other thing. That means the tax law is more powerful. It supersedes the other law. So employee has to deduct tax, APIT and remit. Commissioner General has published APIT table based on the individual tax rates and related procedures. Right? Under the APIT there are 7 schedules. You may heard that one. As per the schedules in the table, right? As per the table, employer can deduct tax. Example, table 1, it is on regular profit, monthly regular profit, right? Monthly regular profit. If it is exceed 100,000, there is a formula, you can work out the tax and whole tax and remit to the tax authority. And table 2 is about the lump sum payment. That means just like bonus and all those things, salary arrears. So table 2 need to be applied. Once the table 2 applied, that correct tax is work out and it need to be remitted to the Commissioner General. Right? Likewise, there are 7 schedules. So tables, that table need to be applied. Correct table need to be applied by it is the responsibility of the employee to apply the correct table and work out the correct tax and remit, right? Whole tax. Tax on terminal benefits, that is terminal benefits means at the termination or the retirement. It may be termination or maybe the retirement. Employee has to deduct tax if any terminal benefits. As example, you know, in case of the termination in Sri Lanka, we have a gratuity law. Under the gratuity law, we have to pay gratuity. We have to mean the employee has to pay gratuity. That is the entitlement of an employee. Therefore, that is considered for the tax purpose as a terminal benefit. For the terminal benefit, that table 3 need to be applied and work out. There are 7 tables as I mentioned. So, the table 1 is if the monthly regular profits, I could say regular profit is exceed 100,000, table 1 need to be applied, right? So, interestingly, if somebody is having less than 100,000 per month, but annually if it is more than 1.2 million, 1.2 million is the, what is that? In case of the individual, it is tax, tax relief, allowance, personal allowance, tax relief. So, if it is exceed 1.2 million annual cumulative amount, so then there is a separate table designed for that one. Table 5 need to be applied. Table 7 is for second employment other than primary employee. So, this law recognize primary and it's even secondary, it's not other than primary employee, right? I mean the one particular employee can be can enter an employment agreement with more than one employer. So a simple example is director. Director also an employee, right? Director can be, in case of the group companies, he may be having few employment contract, right? So primary declaration, so I mean the more than that thing he has to give other than primary declaration. So this is the responsibility of the employer, right? He has to first thing apply he has to register with the tax authority as an agent, and thereafter he has to apply the correct tax table, work out the tax and deduct the tax, and remit the tax before 15th day of the next month, coming month, right? Immediately succeeding month, that month means that and submit the employer's declaration, annual declaration. So APIT declaration by 30th April, and issuing certificate, tax deductor certificate, withholding tax certificate, we call T10 certificate. right? In case of, say, if you are receiving more than 100,000 employment income, he has to give withholding tax certificate, tax certificate, which says your total earnings, right, and how much tax withheld and paid to the tax authority. So maintain details of employee related payment. In the examination context, not testable. I'm in the, for your knowledge, I'm sharing this thing because in some instances they are asking employment income related questions as well. Not, I mean, there is no big weight, but even when we are making any advice, some question they are asking advice to the particular taxpayer. So these things you can consider. Okay. So withholding from investment return, person shall withhold tax at the rate provided in para 10 of the first schedule, where a person pays a dividend, interest, discount, charges, and natural resource payment, rent, royalty, and premium. Pays amount as winning from lottery, rewards, betting or gambling. That is also subject to withholding tax under the investment return. The payment or allocation has a source in Sri Lanka. This is very important. There should be a source in Sri Lanka. Person liable, chargeable for Sri Lanka tax is person who is having taxable income or receiving charging section 2. Final withholding. Receipt of final withholding payment is liable for tax in Sri Lanka, right? So here, so what we are discussing, withholding tax. Under withholding tax, there are some withholding tax recognized as final withholding. I mean, thereafter, no more tax. That is the maximum tax in Sri Lanka, right? So to withholding tax, there should be source in Sri Lanka, right? Source in Sri Lanka. That's mentioned, right? So second one is, so where a person make a payment to non-resident person, that non-resident person has a source in Sri Lanka. So second one is, the National Gem and Jewellery Authority shall withhold tax at the rate provided in the para 10, that is 2.5% per schedule, from the sale price of any gem sold at an auction conducted by it, from the sum payable to the seller of such gem, and at the time of such sum is paid to the seller. That is exempt from income tax, that particular income, but it is subject to withholding tax. From 1st Jan 2023, person shall deduct advance income tax from the payment of dividend and this thing. And so what is source in Sri Lanka? This is very important, right? In case of the, when we work out tax computation in case of the non-resident person, right? So we have to first check whether there is an source. There is a source in Sri Lanka. So why I told you, non-resident person is liable for Sri Lanka tax if there is income derived or arise from Sri Lanka. That means there should be a source in Sri Lanka. If it is the case, he is liable for tax in Sri Lanka, otherwise he is not liable for tax in Sri Lanka, right? So in respect of employment, to the extent derived in respect of employment in Sri Lanka, wherever payment is happened, right? Say non-resident person is working in Sri Lanka, then should be treated as there is a source in Sri Lanka because they exercise an employment in Sri Lanka. If paid by on behalf of the government of Sri Lanka, where are the employment? Dividend paid by a resident company. If the resident companies make a dividend payment, it's considered as there is a source in Sri Lanka. Interest, charges, annuity or royalty, technical service fee or similar payment if paid by a resident person, other than as an expenditure of a business carried on by the resident person through a permanent establishment outside Sri Lanka. Paid by a non-resident person as an expenditure of a business carried on by the non-resident person through a Sri Lanka permanent establishment. Right? Paid by a government of Sri Lanka, including such payment made by any institution on behalf of the government of Sri Lanka. Right? It says, in case of the employment is exercised in Sri Lanka, then it should be treated as there is a source in Sri Lanka. It doesn't talks about where the payment is coming, where the employment is exercised. Right? So second thing is, in case of the resident company, their dividend, they should be treated as there is a source in Sri Lanka. Other one is what? Resident person pays resident person. Makes any payment, say interest, charges, annuity or whatever thing. If a resident person is make that payment, it should be considered as there is a source in Sri Lanka to the recipient, right? Other one is says, is a non-resident person for Sri Lanka tax. Non-resident person. He is having a permanent business place in Sri Lanka. Right? We call permanent establishment. We'll discuss, right? Don't worry on that one. So this particular permanent establishment is incurring some sort of expenditure. If it is received by a person, then it is treated as there is a source in Sri Lanka. Clear, right? However, you can check that there should be an income which is generated from Sri Lanka or derived from Sri Lanka. Right? In such case, it is considered as there is a source in Sri Lanka. If it is the case, then there is a chance to apply tax. Winning from lottery, betting or gambling related to a game of chance held in Sri Lanka. Natural resource payment made in respect of or calculated by reference to natural resource taken from land or the sea situated within Sri Lanka or its territorial waters. Rent paid for the use of right to use or prohibitions from using an asset situated in Sri Lanka. Premium for general insurance paid to and proceed from general insurance paid by a person in respect of the insurance of any risk in Sri Lanka. Right? Payment received by a person who conducts a relevant transport business in respect of the carriage of passengers who embark or cargo, mail or other movable tangible assets that are embarked in Sri Lanka other than as a resource of transshipment or rental of containers and related equipment which are supplementary or incidental to carriage. So in case of the, when we discuss when we are discussing the taxation of non-resident person, especially where the double tax treaty is coming a big role, right? At that time also we should have understanding where the source. That is the relevance of this one, right? So, therefore, this is important. Payment received by a person who conducts a business of transmitting messages by cable, radio, optical fibers or satellite or electronic communication in respect of the transmission of message by operator established in Sri Lanka. whether or not such message originates in Sri Lanka. It says where that equipment is established. Payment includes service fee attributable to service rendered or a prohibition from rendering services in Sri Lanka regardless of the place of payment. Where the payer is the government of Sri Lanka irrespective of the place of exercise, rendering or prohibitions. Proceeds of life insurance and retirement termination and pension payment. Paid by a resident person other than as an expenditure for business carried on by the resident person through a permanent establishment outside Sri Lanka. Paid by a non-resident person as an expenditure for business carried on by the non-resident person through a Sri Lanka PE or paid by on behalf of the government of Sri Lanka. Gift and other ex gratia payments to the extent received in respect of business or investment conducted with domestic assets. Payments made in respect of acquisition of a domestic asset, incurring of a domestic liability or realization of such an assets or liability. Payment received in respect of activity conducted or a prohibition from conducting activity in Sri Lanka, except in relation to the resident person to the extent attributable to foreign permanent establishment. In relation to a non-resident person to the extent attributable to a Sri Lanka permanent establishment or any other activity including sales in Sri Lanka of goods and merchandise of the same or similar kind as that conducted by the non-resident person through a Sri Lankan permanent establishment made to any foreign entertainer or artist for activity relating to Sri Lanka. What is this talk about? Source in Sri Lanka. Right? There should be source. I mean the income should be generated from Sri Lanka, derived from Sri Lanka. If it is the case, we should consider that there is a source in Sri Lanka. You know that source principles and the residence principles is important. Two principles, right? But in case of the non-resident person, we talks about that he is liable for Sri Lanka tax if there is income derived from Sri Lanka. That is source principle, right? In case of the resident person, he is liable for Sri Lanka tax wherever the source arises. That is resident principle, right? In case of the resident person, he is liable for Sri Lanka income tax irrespective of whether that source is in Sri Lanka or elsewhere. Wherever the source, he is liable for Sri Lanka tax, right? In case of the non-resident person, he is liable for Sri Lanka tax only to the extent that particular income is derived from Sri Lanka, right? Then there should be a source in Sri Lanka, right? So for our discussion, why it is important? So if the income is derived from Sri Lanka, then that withholding tax is coming to operate, right? So at the time of the payment, somebody is making payment, right? Maybe in Sri Lanka to the person, other person in Sri Lanka, right? Maybe person outside Sri Lanka, right? So then that withholding tax is coming to operate if it is chargeable or the liable for withholding tax, right? So I told you that section 83 talks about employment income and liability on tax, the APIT liability, advance personal income tax, application of the advance personal income tax. If there is a employment source in Sri Lanka, then that APIT will be applicable, right? Says in case of the resident person how to apply, in case of the non-resident person how to apply, right? But then there is the application of APIT. And in case of the investment return, it also talks about the asset trees in Sri Lanka, right? Likewise, natural resources Sri Lanka, or right to use, or the right which is related to the asset in Sri Lanka. So therefore, again it is also Sri Lanka source, right? So payment to non-resident person with respect to land, sea, air transport or telecommunication services in terms of the section and extraordinary gazette notification, there is a gazette notification 2%. So it says what sort of payment. Interest or discount paid by a person 5% without tax. Rent payment made to a resident person where the aggregate payment exceeds rupees 100,000 per month. Underline, rent payment made to a resident person. So in a different color, I said. Rent payment made to a resident person, right? If the aggregate payment is exceed rupees 100,000 per month, monthly payment is exceed 100,000, then withholding tax is coming. Remember, this is what under which category? This is coming under the investment return, right? It says rent payment for the use of or right to use property, movable or immovable of any kind. Hiring services is not subject to AAT withholding tax. There is a circular issued by the Tax Commissioner General. It says hiring services, it is not regarded as rent, right? So difference between hiring service and the rent is, I mean the if the where the assets is there, I mean the right how what is the right having with the user. So in case of the hiring of assets means say a vehicle, the owner of the vehicle retain the possession of the assets and he has some sort of control over the assets, right? Sometimes he may be the operator or the driver and he is maintaining the assets, right? He charges the service fee from the user. So then it is goes as hiring. It is not renting. Renting means says use of or right to use property. Say, so you have a vehicle, you can give that vehicle to another person to use. That the obligation of the maintenance, all the responsibility with the user. Then it is more or less goes as rent, right? Say you want to go some tour, whatever thing, business travel or whatever thing. So then you can call another person and get their service. Say Pick Me or the Uber, whatever thing. You book a vehicle and you can use that, right? You are not bothered about the assets. You can make the condition, what sort of vehicle, the condition of the vehicle and everything you can select. But that whole responsibility providing that particular facility is with the vehicle owner. Then it is hiring. Hiring goes as service. Under this particular section, we talks about the payment, what sort of payment? Investment return payment, rent. It is not service related payment, right? Then it is not subject to AIT. Rent payments to non-resident, charges, natural resource payment, royalty, premium or pays, amount as winning from a lottery, exceeding $500, rewards, betting or gambling, payment or allocation as source in Sri Lanka, non-resident, in case of the non-resident, rent, whatever thing, withholding tax rate is 14%, right? If no double tax treaty is there, then it's 14%. If double tax agreement is there, rate is specified in the double tax agreement, as well as it is not final in such case, otherwise it is final. I mean, if there is no double tax treaty, then it is treated as final withholding tax. Dividend, now it's 15%. Sales price payable to the seller of the any gem sold at the auction conducted by the National Gem and Jewellery Authority, 0.5%. This is also final withholding. Rent. So, fees paid for local transport service. As this is not recognized under the service fee payment, therefore not subject to 5% withholding tax. Right? Payment for renting vehicle assets, where the ability to control the assets is retained with the user. The control the assets, I mean the ability to control retained with the user. In such case, it is treated as rent. It shall be considered as rent. Factors that may be considered in determining the assets of or on hiring or renting are valid rent agreement. This is practically how we have to decide whether it is rent or service. Time period and possibility of reclaim the assets by the owner. Use identification, purpose of use of the assets. If the aggregate payment is exceed rupees 100,000 per month, it should be deducted on entire amount, not the excess amount, on the entire amount. Say 110,000, 10% on the 110,000. If the payment is exactly 100,000 per month, such payment is not liable for withholding tax. Finance lease. This shall not be considered as rent and not liable for withholding tax. So basically, what is then coming under rent? Finance lease not. Then operating lease, yeah, it could be considered as rent. Rental payment under the operating lease. This shall be considered as rent and liable for withholding tax if the payment is exceed 100,000 per month. Rental payment to co-owner, jointly held assets, where an asset is jointly owned by the entire owned and entered into a rent agreement jointly with the tenant. Rent amount relevant to each co-owner shall be considered separately for withholding tax purpose. Accordingly, WST or the withholding tax shall be applicable for each owner if the respective portion of the rent payment is exceed rupees 100,000 per month. Rental payment to non-resident, irrespective of the amount, shall be considered as rent and liable for withholding tax at 14%, or the rate is specified in the double tax evidence agreement. In case of the non-resident person, that 100,000 LKR thing is no more there. Whatever amount you are paying, subject to withholding tax, it is also not the 10%. Probably it should be 14%. Otherwise, the rate as per the double tax evidence agreement. So, double tax evidence agreement I will little discuss here. So, in our context, Sri Lanka person here, he is, I could say, is a resident person for Sri Lanka tax. So, for the other country side, he may be a non-resident person. I mean, there is no chance to one person be a resident for two countries. Definitely, he or the person resident for one particular jurisdiction, right? So then, therefore, if he become a resident in Sri Lanka, definitely for other countries he is a non-resident person, right? Say Sri Lanka right now, assume our tax rate is 36%. So other country assume that their tax rate is 40%. Right? So I told you, in case of the resident person, right, section 2, section 3 says, resident person, in case of the resident person, he is liable for Sri Lanka tax, income tax, wherever the source arises, residency principle, right? If he become a resident person for Sri Lanka tax, this is tax purpose, right? If he become a resident person for Sri Lanka tax, he is liable for Sri Lanka income tax wherever the source arises. Okay, assume he is receiving some income from this particular country. Then no doubt, as per Sri Lanka tax law, he is liable for tax in Sri Lanka, right? For the time being, we'll keep go as it is. For this country, he is a non-resident person. Then he is liable for tax in this country to the extent that particular income, derived from that country. Same, he received LKR 100,000 equivalent amount, then it could be liable for tax at 40% there, right? His net income from that particular country is 60,000 LKR, right? For this country purpose, he received, his total earning is 100,000. On that, he is liable for tax at 36%. Now, how much the total tax? Here 40,000. Here altogether 76,000 tax. In our law, there is the section called foreign tax credit, claimability of foreign tax credit, and there is another, another way. So we call this is double tax. One source tax at 2 point, it is subject to double taxation. It's not fair. One source, same source. The source what we received from outside Sri Lanka, it is taxed at the particular country as well as, and that particular income is liable for tax at the person who is resident. Right? To avoid this one, there is a mechanism called treaty arrangement. Between two countries, they have agreed how to tax that particular income. Right? So there are so many ways to avoid this double taxation. It says, okay, you have to pay tax here and not pay here tax, or work out the tax here, and whatever you paid there you can deduct as tax credit. Right? There's 2-3 ways to eliminate double tax. That is the concept of double tax avoidance agreement. Between two countries, tax authority agree with, or the finance ministry or the political authority, they agree with the two countries, this is within two countries, between two countries. They agree, okay, if our person is liable for tax in your country, so we'll give the tax credit for that one, or we'll give an exemption. Right? Likewise, this party also agree. It's there is a mechanism, how to negotiate and all those things. So thereafter, that clauses are, the terms are coming to the agreement, then agreed between two countries. Then the chances to tax at 2 point can be eliminated. Okay, that is the concept of double tax avoidance agreement, or we call treaty, tax treaty between two countries. It is always between two countries. Right? Double tax avoidance agreement, DTA. Right? We'll have a separate, the detailed discussion. Right? Don't worry. I will take the double tax agreement and we'll discuss how it's the mechanism of the double tax avoidance. Right? And considering the recognizing income and how it should be taxed, says if it is taxed only in this particular country, some income, says some income is taxed at only in particular country, not the both country. It says, yeah, it may be taxed in this country as well as this country, but you can get the tax credit. Likewise, it goes. Okay? Right. So That is to you to clear on this one, right? Says rate specifies such payment in not liable. I mean, it says in the double tax evidence agreement says what is the tax rate evidence agreement. Okay. Example, if you are making a dividend payment to the person who is resident in Singapore, right? Resident person in Singapore, then dividend tax is as per this law. It's as per the inland law, but the withholding tax rate for dividend 15%, right? If that there is another condition also in the double tax treaty between Sri Lanka and Singapore. It says 7.5%. Then that particular company, resident company, if they are declaring dividend to the person who is resident in Singapore, tax rate, withholding tax rate may not be the 15%. There is a chance to apply 7.5%. If you are making any service fee to a non-resident person, it is subject to withholding as per the domestic law. It is subject to tax at 14%. If you are making any technical service fee to the India person, resident person in India, that rate is not 14%, it says 10%. Right? Likewise. So agreement itself, it says what the rate that should be applied. Right. So this I have elaborated how it's applicable. Person who make a payment, resident or non-resident person, then whether it is subject to withholding tax or not. Person not include government, ministries, department and local authority. Individual not doing business, not subject to AIT, makes a payment, resident or non-resident person. Person pays interest on ordinary loans, financial institution, no subject to withholding tax. If I am making a payment to bank, so I mentioned there that if it is the form of interest, withholding tax is 5%. If I obtain a loan for the domestic purposes, consumption purposes, whatever thing, if I am making that payment, person pays interest on ordinary loans to financial institution, then no withholding tax. Person pays interest on treasury bills and bonds, resident or non-resident person, no withholding tax. Right? Person makes a payment, person income exempt from tax, resident or non-resident. In such case, no withholding tax is applicable. So section 851C, withholding payment on service fee, contract payment and payment to non-resident. Service fee, contract payment and service fee to or the payment to non-resident. 1.23, a person shall withhold tax at the rate of 5% of the payment where such person pays a service fee with source in Sri Lanka to a resident individual. Underline. Person shall withhold tax to a resident individual who is not an employee of the payer. In case of the employee, it is not covered here, it is covered under section 83. So only these type of payments are subject to right now withholding tax at 5% in case of the person make a payment to resident individual. For teaching, lecturing, examining, invigilator or supervising an examination as a commission or sale law or independent service provider in the capacity, underline in the capacity of independent service provider, such as doctor, engineer, accountant, lawyer, software developer, researcher, academy or any individual service provider as may be prescribed by regulation. Right now, as per the law, only these type of individuals are covered here. Who? Doctor, engineer, accountant, lawyer, software developer, researcher, academic. Right? Say, it says individual capacity, in the capacity of the individual service provider, independent service provider, individual independent service provider. Right? Teaching, lecturing, that is there. Commission or brokerage or resident insurance, sales or canvassing, that is there. So other type of payment for service provided by such individual in the capacity of independent service provider means doctor, engineer, accountant, lawyers, software developer, researcher, and these things. Other what the services provided as may be prescribed by the regulation. Still, they have not yet prescribed. Therefore, for the time being, any individual who is getting this, this type of, doing any service of this type of, he will be subject to withholding tax. Provided that the monthly payment is exceed 100,000. Provided, however, this subsection shall not apply to a service payment which does not exceed rupees 100,000 per month. If it is exceed 100,000, then it is subject to withholding tax at 5%. Okay. A person shall withhold tax at the rate of 14% of the payment where such person pays a service fee or an insurance premium with an source in Sri Lanka to a non-resident person, or rate is specified in double tax treaty. Resident person shall withhold tax when the person makes a payments to a non-resident person of a type referred to in para HOI of section 73, that is land, sea or air transport or telecommunication services. The service fee and contract payment income is more than 100,000. This type of thing: teaching, lecturing, examination, invigilator, or supervising an examination, commission or brokerage to a resident insurance sales or canvassing agent, service provider individual in the capacity of independent service provider such as doctor, engineer, accountant, lawyer, software developers, researcher, academic, or any individual service provider as may be prescribed by the regulation. Construction services, janitorial services, security services, catering, management services, consultant services, etc. are not subject to withholding tax as per the existing law. Payment to none. Even it is as independent capacity, independent service provider. Say I could do consultation. As accountant is there. If I am doing accounting services, then it should be. But in case of say management consultancy, that is not there. I can do in the freelance service, right? It is independent service. Can work as an independent service provider, but it's time being it is not subject to withholding tax. Pays a service fee on insurance premium with source in Sri Lanka to a non-resident person 14%. Payment to resident individual or non-resident person not subject to withholding tax. Individual not doing business. If I am doing a business and make this type of service payment, then I am supposed to deduct withholding tax. Make a payment, resident individual or non-resident person. Person make a service fee if the income is exempt from tax in the hand of the resident or non-resident person. So why it says if it is exempt, there won't be any tax. So final withholding. What is final withholding? Final withholding means, as I mentioned earlier, once the withholding agent deduct tax with the as per the rate specified by the law, tax on that be the that particular person is liable for Sri Lanka, right? You know that what is withholding tax system now? Payment, at the time of payment, withholding tax need to be deducted, right? On the payment, right? So, some withholding it says or the law itself is recognized this is final withholding. Simple example: if the company declare dividend, right? Dividend assuming from profit, then company is supposed to deduct withholding tax at the rate of 15%, right? %, right? So then the company is deducting withholding tax at 15%. This particular, say, assuming he is paying 100,000 dividend, right? They are deducting 15,000 as withholding tax, and he received 85,000. For the tax purpose, he is liable for tax on gross income, not the net income, right? So if we work out his tax liability, then he has to consider gross income, and as per the tax rate which is applicable for a particular person, he has to work out the tax liability, right? Assume he is liable for tax at 36%, then he has to work out the tax on this income 36,000, right? Tax has been paid at the time of payment 15,000, then balance need to be pay 21,000, right? That is the mechanism. But if particular withholding tax is recognized as final withholding, that is as per the law, if it is recognized as final withholding, then he is not liable for tax at 36%. This is recognized as final withholding payment. What is the tax deduct and paid by the particular withholding agent is the maximum tax he has to pay, or he is liable. That is called final withholding. How final withholding recognized? It should be specified by the law. Otherwise, we don't know, right? So for as per the existing law, so dividend is final withholding, subject to final withholding. No more tax. Once the company does 15%, the recipient is not liable for tax other than that 15%. Right? Clear? That is final withholding. Okay. So amount paid as winning from a lottery rewards betting or gambling other than amount received in conducting business considered betting and gambling. Winning from a lottery rewards betting or gambling, that is final withholding 14%. Dividend paid by resident company, right, other than exempt, it is final withholding. Payment made to a non-resident person who is not a citizen of Sri Lanka or to a non-resident entity, that is subject to withholding tax, withholding other than payment derived through a Sri Lanka permanent establishment. The withholding of a payment that is not a final withholding payment shall be entitled to a tax credit in an amount equal to the tax treated as paid, right? That means what I discussed, if it is not final withholding, he has to consider his gross income and apply the rate and work out the tax liability. Whatever tax other than final withholding, he can claim as tax credit. So here, agent is deducting tax on behalf of the government. The tax liability is with the recipient, his liability, that is his tax. He is liable for tax, right? Therefore, he is entitled to get the credit. Example, if you are getting employment income from your employer, if it is more than 100,000, then the employee is deducting tax. So in your hand, it is not final withholding, then you have to work out your tax liability and you can get the tax credit for withholding what the employer deduct and remit to the tax authority, right? That's why that tax certificate is important. Why? The taxpayer to claim the tax credit, he should have some sort of confirmation. So withholding agent is issuing tax certificate to confirming how much he has deducted at the time of payment. And his side, it is a confirmation of his tax payment, right? Clear? Right. So if it is not final withholding, the recipient, income owner, he can claim tax credit, right? Apply the responsibility of the agent, apply the appropriate tax rate, tax deduct, and deducted tax rate need to be remitted to the tax authority by 15th day of the following month, and payment that this is the administrative thing. Code, what the code that need to be applied. Submit the WH return or the AAT return on or before 30th April. Doing withholding certificate on the gross payment, tax deducted and within 30 calendar month, right? That is the mechanism of withholding tax. Clear? So important thing is, if any payment which is subject to withholding tax, the payer side it is expense, right? Example, assume rent. But the payer side or the agent, withholding agent side, his side, it is his expense, right? Right? Expense. Say your employer making a remuneration through you. His side, it is staff cost. Their cost, right? Remuneration. So if any payment which is subject to withholding tax or which is liable for withholding, but the payer fail to deduct withholding, then the payer cannot consider this as an allowable expenditure for tax purpose. Allowable expenditure for taxpayer, right? Tax purpose, right? In the tax computation, we discuss allowable, disallowable expenditure. If the payer has not or the fail to deduct withholding on any payment which is subject to withholding, that particular expenditure is not allowable deduction until such tax has been remitted to the Commissioner General's account. Right? That is the main point what I need to highlight here. After talking all those things, what is the relevant part is, if any payment which is liable for withholding tax, so at the time of the payment, it's the payer or the withholding agent supposed to deduct withholding, but if he fail to deduct withhold or if he fail to hold the tax and make the payment, then particular expenditure is not an allowable expenditure for income tax computation for the particular person. Right? That is the learning point here. Okay? Right. So very, very important. So then the examiner should give that details, right? We don't know whether that say ABC company's computation we are working, he is supposed to work out the question which is related to ABC company, and he should give that details. So he pay to deduct withholding whatever thing, right? Or that deduct some part, not deduct some part, whatever thing. Right. By installment payment, quarterly installment, section 90. So a person who is an installment payer, says installment payer, underline, who is an installment payer shall pay tax by quarterly installment. That is only applicable to the installment taxpayer. First thing, he should be an installment taxpayer, otherwise it is not the case. He need not pay by installment, right? Quarterly installment, if he derive or expect to derive assessable income during a year of assessment from a business, investment or other income from an employment where the employee is not required, right? How gains be derived from the realization of investment assets during a year of assessment shall not be considered for the purpose of quarterly installment. Or the realization of assets gained from the realization of investment assets, that is not subject to quarterly installment. It should be also self-assessment basis, but not subject to installment payment. An installment payer shall pay installment of tax for the year of assessment on or before the 15th day, respectively August, November, February, May. Installment of tax payable by an installment payer for a year of assessment shall be calculated according to the formula. This is the formula, right? A is the current estimated tax payable by the installment payer for the year of assessment. B is the number of installments remaining for the year of assessment. Current installment. Sum of any tax paid during the year of assessment, but prior to the due date for payment of the installment. Tax is held during the year, not a final withholding payment, but prior to the due date for payment of the installment from payment received by the person that are included in calculating the person's income for the year. Right? This time they have mentioned that estimated advance income, personal income tax also we can deduct for the 23-24 year of assessment. Right? It says in the set or the statement of estimated tax payable, it says, so in case of the employment income, if you, in my view, or the law is very clear, it says installment taxpayer need to be submit the statement of estimated tax payable. Right? If I am having only income which is subject to withholding tax, the employer, I am having only employment income which is subject to withholding tax, that means the APIT has been deducted, then there won't be any installment tax payment from my side. The extract tax is deducted by the employer and remit by way of mode of withholding tax. Then I am not a installment taxpayer. Installment taxpayer is supposed to submit the statement of estimated tax payable. So if it is the case, I need not to be considered. But here it says, if you are taking the employment income, you can get the API estimated tax rate. Because as per this one, this formula, this is A is the total estimated tax payable for the year. C is the tax paid up to now, not the estimated tax payable. Right? Example, I am having rent income. Okay? So when the payer make the payment, he may deduct withholding tax. So if I am work out my gross income tax payable, so I have to get the gross rent income and work out the tax, and that should be the tax payable for the year. So thereafter I have to deduct whatever tax paid up to now, including withholding tax. It doesn't say estimated withholding tax can be deducted here. It says tax paid. Right? Then first installment there will be payment. Second installment also there will be payment. Third and fourth installment there will be an excess payment because of withholding tax. Right? But here says tax withheld during the year, but prior to the due date of the payment. Okay? Therefore, if I put my employment income and work out this thing, and I take the total gross earning for the whole year, and I have to work out the tax liability for the whole year, and deduct the APIT deduct up to now, not the balance period. Right? But here it says, if you are taking the employment income, you put the APIT estimated amount as well. Right? In case of the rent income, it is not the case. It says rent income, gross rent income for the year, and on that tax liability, whole tax liability, estimated tax liability for the year, and we have that deducted up to now. Say we have 3 months, so I can deduct 3 months withholding tax only. Balance 9 months is liable for tax. Right? So help plus that the formula given by that statement. Every person who is an installment payer for a year of assessment shall file with the Commissioner General by the due date for payment of the first tax installment and estimated tax payable for the year. Person taxable income for the year of assessment for each employment, business and investment and the source of the income. The person's taxable income for the year and the tax payable with respect to that income. In estimating tax payable for a year of assessment, a person may take into account a foreign tax credit to be claimed. Foreign tax to be claimed means, what I mentioned earlier, if somebody is having cross-border activity, then he may have paid tax in the other country. That also can be claimed. However, in doing so, a person may take accounts of foreign income tax only if the person has paid the tax or the person reasonably estimate that the tax will be paid during the year. An installment payer estimate shall remain in force for a whole of the year of the assessment unless the person files a revised estimate with the Commissioner General. right now in our, after 2018, the taxpayer work out the estimated tax payable for the year, and as per his estimation, he can discharge his tax liability by installment payment. If there is any revision to the estimation, he can make an revised estimate. If he is not revised, that the original statement is remain, right? So, assessment, person shall file with the Commission General not later than 8 months each year of assessment a return for that year. The shall be paid on the date that is 6 months after the end of the year for which a return of income shall be filed. So, after 8 months means year of assessment is ending with 31st March. From that 8 months means 30th November, right? 30th November. Return is coming 30th, make a note there. Right, it says 30th March, that for 6 months. Right, 6 months. Payment need to be made. Amount of tax remaining to be paid for the year. So, we do a first how it goes. First we do a estimation. We work out the estimated tax payable for the year. Thereafter, we pay tax based on that one. Based on the estimation. So, once the year of assessment is completed, 31st March, from that date, there is 6 month period to pay any balance tax, right? You know that first installment is August, second installment is November, third one is February, fourth one is May, right? After that, we have another few months, or till 30th September, we can work out the correct tax for the year because we have already given the estimation. On that basis, we have paid the installment payment, right? Once we work out the correct tax liability for the year of assessment before 30th September, or the 30th September, we can pay any balance tax liability. That is also goes as assessment based tax. Which assessment? Self-assessment tax, right? Tax return is 30th November. If there is any balance tax liability, that need to be paid by 30th September. So, year of assessment 22-23, if there is any balance tax liability, that need to be paid by the 30th September 2023. Tax return for the year 22-23 need to be submitted by 30th November 2023. So, next one is, every person with taxable income consists of a gain from the realization of an investment asset shall file with the Commission General a capital gain tax return within 30 days, underline, within 30 days after the end of the relevant calendar month in which the realization occurred. Now, it says within 30 months, 30 days, sorry, within 30 days from the month, not the date of realization, month of realization. They gave 30 days. Tax to be paid on the date on which the capital gain tax return shall be filed. In any other case, on the date stated in the notice for payment. Notice for payment means the assessment notice. Right? In notice it says tax should be paid by 20 days or whatever days that need to be paid. That is on assessment based tax. 30 days from the month of realization. Other Other assessment as per notice. Note that assessment notice says what is the due date for the payment.